Hey, this is June from Turning Point Life Investment, and this video is for the week ending September 27, 2008. And once again, let's take a look at the SPY starting with the long-term weekly view. Now, I know with the recent market volatility, there's a lot of whipsaws and a lot of violent up and down swings, and it's very helpful for you guys to just kind of take a step back and look at the overall bigger picture of what the market is doing. And that's why I always like to look on a weekly view, because that gives me a general idea of the overall trend. And right now, the overall trend is still down. As you can see, the prices and moving averages are starting to separate. And when they start to separate or fan out, that means strength. And just like here, how we had a very good separation of prices and the 20 and the 50, and notice how strong this rally is. When the prices and moving average start to contract, just like here, that basically means either a change in trend or a consolidation period. And right now you can see it's starting to fan out, and we can see that the momentum is definitely pointing towards the downside. We ended this week with a large dark candlestick, which is, like I said, potentially very bearish. From what I mentioned last week, I did point out that this was a potential head fake. Okay, and this is potentially bullish, but we obviously need to see some follow through for a break above this level, and we haven't gotten that yet. Okay, so not until we see a break above that red line over there can we say this was truly a head fake and that is the bottom. But right now, based on this week's action, I'm starting to think otherwise, that maybe this wasn't a head fake after all. But it's still too soon to say anything right now. Going into a daily view, the first thing we notice is the volume. Volume is definitely average, or at least slightly below average, definitely less than last week's volume. So my best guess is probably traders are waiting for the bailout plan just to see what's going to happen. They're more or less sitting on the sidelines. I would too. This type of market is more or less kind of hard to trade. We noticed from last week's big gap, we basically closed the gap. That's like the mantra, right? Most people always say, "Oh, gaps are closed," most of the time at least. We did find support right above 118 here. Okay, and the market is more or less stuck, has been consolidating for the last 3 days. And we are still trading underneath the 20 and 50-day moving average, which is still indicating bearish momentum. Let me go into an hourly view to get a better idea. So like I said, 118 was a pretty good support that was put in earlier this week. Obviously, if that breaks, then we can easily come back to see 114 again. We are still have upper resistance right here at 122. Okay, the market, as you can see, these last couple of days has been stuck between this 122, 118 range, and our ultimate resistance right here, 128 as well. 128. So, after the large decline we had, we were into oversold. The market more or less relieved itself that it's oversold by consolidating sideways. You can also tell by the prices how they're just kind of in and out of this moving averages here. When it's trending like this is great for traders, right? Swing traders love looking for these short-term trends. But when it's kind of whipsaw like this, it's kind of hard to trade for this market. And that's why I recommend at least kind of sitting out and wait for some kind of direction. Of course, unless you're day trading, this is perfect. But if you're swing trading like I am, this is not something that I look forward to. It basically puts me out of a job, right, so to speak, when there's really no direction in the market for these last couple of days. So you just gotta wait. You gotta wait to see if 118 breaks. If that does, and then we can come back to 114. If there's an upside break, we can definitely see resistance at 128. And ultimately, from our daily view, we said that 131 was always the ultimate level of resistance. So as you can see, with so many different levels of resistance and support, the market's got to really gain some momentum to push through either to the upside or downside. Going into the VIX daily view, we noticed that this entire week we've been trading above 30. Right, that's very volatile. At least premium is definitely high. So if you're options seller, this is a very good environment to be selling options. Now, if we were to treat this like a regular stock, this pattern is actually pretty bullish. We have a bullish flag, right, if that's what you want to call it. Right, we had a nice run up, passed through the previous resistance, and now we're consolidating, and up against resistance, which is potentially bullish, right? If we have a nice breakout above 36. So we have a breakout above 36 that translates to a breakdown in the market, right? So just looking at the VIX alone, it's making me lean towards more of a bearish tone for the market. How this consolidation pattern that we're having is basically setting up for a new leg down. Ultimately, it has to break 118, of course, to confirm that. But just looking at the VIX, like I said, it's setting up for a break of the down leg for the SPY. Okay, turning our attention to the open interest for the month of October. This column right here is open interest for calls. The one that pops out is 125 here. So 125 calls is going to be, or 125 strike could be potential resistance. Ultimately, the next level will be 130. Those two are two levels for you to keep an eye at. And for the puts, of course, 120 is our level to be watching. And then there's a cluster of three levels right here between the 116, 117, and 118. And as you can see from our charts, 118 was our level of resistance or support to be looking for. So I would say somewhere around this area is going to be some kind of support. Okay, going back to the SPY, just to recap. Yeah, I know there's a lot of different lines here. It can look pretty confusing. But you know, this is just to show you that we are in some kind of range right here, or at least within the last couple of days. Momentum is still downward. The level that you want to be looking for if you're bearish is a break of 118. If 118 breaks, there's a very high chance that we can come back down to 114. So as far as trading, I would wait for a break of 118 to either buy some puts or enter some bear call spreads for SPY. As far as if it does break to the upside, it's really hard to trade because why? There's several levels of resistance that it has to break through. So I will wait for a clearer break up here to be more bullish. But I'm leaning more towards, like I said, bearish towards this market, at least short term and long term.